The morning star candlestick pattern is different from what we've seen so far because this is a free candle pattern. The morning star should appear in a downtrend and it indicates a potential bullish reversal. The first candle in a morning star should be a long black down candle. The second candle can be either black or white. And then the third candle should be a white strong up candle, which closes above the second candle and into or above the first candle. So this is the opposite of an evening star, and according to most sources, the signal is stronger if the second candle opens on a gap down. However, that rule makes the signal extremely rare because you don't always get gaps like that, especially in liquid markets like Forex. So here we have an example of a morning star pattern occurring in Chevron CVX. The pattern indicates quite a significant turnaround, and you can see that it set the stage for another upward rally. So after looking at the morning star pattern as it's described in most sources, I discovered that the pattern results in hardly any trading signals when you include the gap. So because of this, our formula doesn't include the gap, and I think it's much better this way because we want to have a large sample of trades to base our analysis on. So we've got the code written down, and in this instance, O2 and C2 refer to the first candle in our three candle pattern. They've just been pushed back a couple of bars, and H1 refers to the second candle in the pattern. And our downtrend formula has been put back one candle because it would be wrong to see the third candle make a new 10-day low and then reverse above the second candle. Anyway, by putting this code into AmiBroker, we can identify morning stars and then run a simulation to see how buying this candle performs over time. So, buying a morning star on the close and exiting the trade one day later produced an average loss of 0.13% across our 21 markets. You can see that our best market was the 5-year note and our worst was sugar. In stocks, we recorded a loss of 0.04% per trade with a win rate of 48% across 4,297 trades. With a 3-day holding period, the morning star is still a losing pattern across our 21 markets, and it just about broke even in stocks. Results improved slightly with a 5-day holding period, where we recorded an average profit of 0.08% per trade in futures and Forex markets and 0.22% in stocks with a win rate of 52%. Both results here are better than the benchmark 5-day return. Finally, with a 10-day hold, the pattern saw an average gain of 0.13% across our 21 markets, but it lost money in stocks. So the morning star pattern has given us some mixed results. Overall, the pattern is not very consistent, and there's no evidence here that it's a profitable signal. Next, we'll look at the evening star.